So yeah, just wanted to share a little bit background about myself. And so when you, I mean, if you are a beginner or if you are an advanced trader, right? I mean, the learning never stops. Basically, you're always learning. You're always trying to improve. So what helped me was that I found my niche. My niche was that uh, it had to match with my personality. So I'm a very impatient person when it comes to trading. Okay. Overall, generally speaking, as well. As soon, I mean, the moment I'm in a trade, I want to get out. Okay. So I had to realize that that was my weakness. But if I don't know my weakness, then there is no way I can overcome it. Right. So I knew that. And so that made me naturally a more short-term trader, day trader, right? Scalper kind of a person. Yes, I still do swing trades, but my specialty was day trading because it matched my personality. I did not like taking positions overnight, things of that nature. I mean, I have come a long way from that, but in the start, that's what helped me. So as we go through this and as you go through your trading journey, I would say focus on that. Focus on what is it that works for you, uh, and I'm sure you will find success in that way. Okay, so the big change or the big jump for me came when I realized that okay, I'm a scalper, I'm a day trader, all that stuff. But then if I had to support my family full time, I had to leave my job at EY and Deloitte. That meant I had to kind of supplement my income from this trading, right? So that it cannot be something discretionary, right? So what I mean by that is that I did not want to be in the position to analyze the charts after every single trade. That would have been so much impossible for me to sort of comprehend, right? I did not want to be in the position of coming out of one trade and then started analyzing another trade, different charts. It would have been too stressful. I mean, that there was no way I could support my family and do it full time if that was the path I was going to choose, right? So that's why I looked into yes, price action based trading, but I also looked into systematic trading approaches. So by systematic trading approaches, I mean, you follow a certain strategy, a certain methodology that you can rinse and repeat every day without thinking, right? Without even knowing where the price is, as long as the criteria is met, as long as the chart based criteria is met, I'm going to trade. I don't care what else is happening outside, what the market is doing, if it's down or up, whatever. I don't care. My criteria is met and I'm going to enter. I'm going to define my risk and that's it, right? So that's what really propelled me, I would say, forward in my trading career, where I had a system that was working for me where I don't have to think about, the trades every time. But anyways, that's outside of the scope of this meeting. This purpose of this meeting that I thought was that since you guys are all nice and trading and everything, and I sometimes, share the charts with you in the WhatsApp group, and some of you pick it up right away, you understand what's going on, but then, some of you find it a little bit hard to decipher, what is it that I'm trying to say, right? So that's why I thought we can spend some time here today to go through some of the basic things on the chart. And then I can just walk you through some of the examples that I have recently shared. And then maybe, you will be able to pick up my thought process and start seeing those things in the chart as I share. Okay, awesome. So okay, so you should be able to share my screen. Sorry, see my screen. So I use the ThinkorSwim platform for my trading stocks and options, and for my futures trading, which is, I would say, 60 to 70% of my trading. That's my bread and butter. That's my daily thing, is futures based. So I trade futures a lot, and I can talk about it later some other time why I do that, because it's very liquid. I don't have to worry about coming up with a lot of capital. I don't have to worry about any stock or company specific news. I can trade anytime I want, 24 hours. So it suits my lifestyle and what I want out of trading, right? So that's why a lot of my trades, 60 to 70% of my trades are from futures. But then I also trade stocks and a little bit of options as well. I'm primarily a price action based trader. So if you're going to come and tell me, hey, AMD or NVIDIA is coming up with a big chip, and this is a fundamental reason their profits are going up. I have no idea. I don't care. As a trader, short-term trader, I just play my setup, chart-based setup. I identify support and resistance levels. I define my risk and I take it every time I do that. And that's it. Okay. Uh, so what you are looking, I think, so the best way for me to explain would be is to go through some examples, I think, right? That's how you can kind of pick up my thought process, and also it will start making sense to you guys a little bit. So I always start whenever analyzing a chart, whenever looking a chart by higher time frame, right? Because if you are right in identifying your trend in the higher time frame, even if your entry is not ideal, right, the chances are the trend will take care of you, right? So for example, if this is AMD chart, right, let's say we were somewhere over here, right, and our entry was somewhere around 140 as it was moving up. As long as the trend is up, and it's within your risk profile, the chances are the trend will take care of you, right? But that's not the only thing we want. We also want to minimize the drawdown when we enter a trade, right? We don't want the trade to go a whole lot against us before it starts going in our favor, right? So we want the minimal drawdown. So that's why to achieve that minimal drawdown, you have to enter at a place where it logically makes sense, where the chances for the price to bounce from are, in terms of probability, are higher, right? So that's how you do it. And if you are really totally new to this, I can share this link with you guys. This is a very cool website which talks about what are charts, support and resistance level, trend lines. It's a very easy, free website, and I can share the link with you. You can read through it, right? If you just want to kind of polish your basics a little bit. Okay. So I'll share that with you later. But for right now, AMD. So what you're looking at is a weekly chart of AMD, right? So you can see it was coming down from, like, for the most 2022, then it started moving back up all the way till good part of 23, even towards the start of 24, and now recently we had a move down. So just by looking at it quickly, you have to come up with these big time frame resistance and support levels, right? So if I look at it, I can say, okay, this was the previous high, right? So I would just quickly draw a sort of a line here, right? And you can make it, I usually make whatever whatever levels I'm making in a weekly time frame, I kind of code them yellow, so that if I'm looking at them later, or in some different time frame, and this line comes up, I will know that this is a weekly resistance. Okay, so that's how it helps me. And then just identify these big weekly uh tops, right? So you can see these are the yellow lines. I'm not going to go through all of them, right? But just these big ones right now, you can say these are the weekly uh, resistance levels. And as the price comes down, these resistance levels do act as support levels if the price is coming down, right? So for example, and if it breaks that, then we know that it's a breakout, or if it's bouncing from that support level, things of that nature, right? So for example, if I zoom in here a little bit, let's get rid of this line. This is the level. Okay, so what I did right now is, you see these big weekly bars, right? This one, right, where there's a big, these are called trend bars, right? These are called trend bars because it opened the week at the low end and it closed at the high end of the week. So it's a trend bar. There is no bottom and top wick, right? So top wick means that the price went above this level and then came back down, right? So this is the top wick. This is a bottom wick, right? So if I zoom in a little bit, just so that you guys know this little bit of terminology, this is a top wick, this is a short wick, right? But this tells you the range of that week. But it closed here and it opened here, right? So these are all basics that you can learn through that website I talked about. So as the price was coming down, right, this is the level it broke out from, right? So this was resistance on the way up, right? This was resistance. It was having a hard time to break above this 150 level for 3 weeks. But once it broke above that, right, it just kind of kept on going up. and then it started coming down, and then you can see it consolidated here for the good amount of 4 to 5 weeks. It was really range bound, right? And the low end of these few weeks where it consolidated was right here, right? So this becomes a key level as well in the weekly time frame, right? So you can see when the price was coming down, right, it paused there for a week before it broke down further, right? It paused there, right there. So as the price is coming down, this becomes your target, right? Because that's where a lot of people went long from, and that's where their stops are sitting. So as soon as the price breaks that weekly low, consolidation low, it fuels further selling, right? And it went all the way down to this level, which was the resistance level, and then it broke out, and now it sort of stopped there and then gave it a bounce, gave us a nice bounce, right? uh, and now if I drill down into a daily view, you will see it a little bit better, right? You can see this was the support level that it broke down from. It went all the way down to this support level, and then we did not see any bearish follow through, right? As the price broke below this level of 150, it was having a hard time giving us a follow through to that move, to that breakdown. So that meant that buyers are stepping in here, right? So they will push the price up, technically speaking, right? And now we have earnings coming up, right? The Probably on I think on Tuesday. So earnings is a binary event. No technical analysis, no price action based analysis will work on the day of earnings, right? Because we don't know what the market will do, if it perceives the earnings as good or as bad, right? We only know that after the fact, right? So earnings is a binary event. If people come and ask me, okay, what do you think will happen in the earnings? Will it go up or down? I don't know, right? So if you are a short-term trader, you have to stop thinking from a prediction. You have to stop predicting where the price will do. Rather, you should adopt a reactionary mindset. So what do I mean by reactionary mindset? So what I mean is that I don't know what the price will do at this point, right? But I know if the price goes towards this level, this next yellow level of 129, or let me actually tweak it a little bit to make it more uh, optimize it a little bit to make it more exact. If it comes to this 133.6, because this was a support level before, right? I will I will react there by buying, right? By buying a call option or even buying a stock for a bounce, right? I will not buy here at 140. I will not buy at 138. I will only buy it around 134 to 133 because that has been previously the support level. So I'm adopting a reactionary approach, right? I'm not predicting that the price will go there, but I'm saying I will react if the price goes there. I will react by buying there because that's has been the support level. That's where the probability of a bounce is higher rather than if I try to buy it at 140 or 138, which really don't have any support in terms of the chart, right? It can still bounce from there. Of course, there is no rule that it won't do it, right? But in trading, it's all about probability, right? So you have to give yourself a chance where the probability is higher to go in your favor. And if I enter here around 134, 133, the chances that I will not see a drawdown are higher, right? Because I'm trying to buy it at a support level. So that's exactly what I did this past week. As the price was falling down from 150 all the way till 145, I knew that this is where if you look at it, look at this. We have 4 days of support here. The price kept on bouncing historically back in January when it was trading here for the four straight days. It kept on bouncing and then it broke out, right? So I knew, or I mean, I did not know, I would say, but I had a good probability that if I buy here around 145, since it has shown four bounces from that area previously, the chances are that I'm going to get, a decent bounce from there. Even if it wants to break down from there, at least it will give me a first touch bounce, right? So that's exactly what it did. From that level, 145, it consolidated the next day, and then it gave a nice, $6, $7 bounce from there. So if you buy calls there, right, from the chart perspective, what does everybody see? Oh, it's going down, right? The trend is down. I'm only going to short. Sure, that makes sense. But you're short. If you short here, it's not a good short here. If you want to short it on the pullback where the resistance is. Now, where do you see the resistance, right? So now, if let's say I remove this level, if I have to come up with a resistance level, a good resistance level for me is right here, 165. Why? Because this was their support level, right? You can see the price was bouncing from this level all these days. And once it broke below that level nicely became a resistance and the price couldn't go above that. So I know if now in the future, right, even after earnings or whatever, if the price comes in this zone right here, which has acted as support recently, I will short it, right? Around 165.6, 165, all the way to 167, right? That's a short zone for me, right? Yes, if it starts going back up, my stop loss would be somewhere around 170, 172, 173, because though that was the high of all these days, right? So the price couldn't get above all. So the chances are that even if I get a short here, my drawdown will be minimal, right? Rather than if I short here, the price can still go up and fail from there, right? But I will experience that drawdown. I don't want to sit on my puts and lose value, right? So I would only time my entry when the price trades in this zone for a short. And my logic is that it was a support and now it will act as a resistance. I'm not using any indicators. I don't use any indicators because in my experience, indicators are good if you want to design some sort of strategy around it, right? You want to take help from those indicators to tell you what to do. But indicators just by definition are somewhat lagging, right? Because they only indicate you after the fact, right? RSI will only go above 70 after the fact, right? Why is it that when you look at MACD, RSI, historically, they look so nice and they always look to be working out nicely and perfectly. But when you start trading them in live, you don't really get those similar good results, right? Number one, because of emotions as well, and number two, because there always some sort of lag in them, right? So by the time RSI will show me oversold here, I would already be coming out of my short. I would already be trimming my short, right? So you have to be reactionary. You have to think ahead because market is always constantly moving. The new information is already very quickly being priced in the stock price, right? So that's why you have to be very reactionary, right? When it comes to trading, you have to be ahead of the game. You have to have a plan ahead of the market, right? So you can't be when the market trades here around 145, right? If you go and look at that time at your indicators, they will all be telling you to short, right? They will all be telling you, oh, it's coming down, it's breaking down. The whole social media will be like, okay, it's bearish, blah, blah, blah. And that's where most of the people will short because that's where also your mind will say, yes, you know, the market is the stock is weak and it's going to go down. And that's exactly when it starts to bounce, right? So plan your trade, right? And identify these high probability zones where you will enter the market. And that's what I do personally. That's what I share with my charts with you. So for example, Tesla. Let's go to take a look at Tesla. So I think this is one of the charts that I shared, right? So this is one of the setups I look for, right? What is the setup? The setup is that the price, let me actually go into this one. So let me go drill down to weekly time frame. There you go. All right, and I will zoom out a little bit, right? So if I zoom out, this green trend line you see, this is a trend line in a sort of a weekly or a monthly time frame, you can say. So this is the higher time frame uptrend line, right? So the stock price fell right there around 140, 138, 137 was that level. And that level was also a weekly support level, right? Back from like 2 years ago, 134 was the level, right? So if I drill down to, let's say, okay, 1 second, daily time frame, you can see also this was sort of a channel. I like to come up with these channels because price moves in these zigzag pattern, which for some reason follows these channels, right? Uh, so this was a good high probability area to go long. Yes, the earnings was around the corner, but a lot of negativity of the stock was already priced in. So from risk and reward perspective, it was a good place to go long there. If you did not do it because of the earnings, that's fine too, right? I would not recommend everybody go long or short before the earnings. It can really, it's a binary event. We don't know. But if you have some risk, that was a good level, right? So since I really don't care much about the fundamentals, I only play my setups, my levels, right? And then why is it that it bounced from there, right? And it also happened to be the channel low. So it's only after the fact you're like, oh, okay, it bounced. Yes, it was earnings, but that was also the channel low. That was also the support level. Yes, blah, blah, blah. That's fine. But from technical price action perspective, that was the uptrend line. That was the channel low. That was the also the support level in weekly time frame. So it was giving me more clues to go long there rather than short, right? And you could see, yes, we would have these gap downs, but then we were missing. You also have to start analyzing the price bars as well. We were missing the trend bars. So the trend bar is where you start the day at the top and you close the day at the very bottom, and it's a long red bar or a long green bar. Those are trend bars. Those show or mean that there's a momentum behind the price. So there was a momentum, right? So that the momentum took the price down. But as we got down, we were losing that momentum. Yes, we would still have red days, but those red days were really, narrow days, right? There was lack of follow through to the downside, right? So it was dying down. The move to the downside was slowing down, right? That's the first indication you get before the price move starts moving back up, right? And we saw a nice bounce up. And now where we are? We are right at the downtrend line, right? We are right there. That's exactly where we paused. Now, what happens next? I don't know, but my plan, what is my plan? My plan is that if we break this uptrend line, I would like to go long towards the next level up, which is 179.2, right? If I bring the lower chart, and if I get into a lower time frame, let's say 15-minute view, right? Look at what's happening. The price made a nice move up after the earnings, right? It's consolidated here. It broke out of this down trend line, right? And then it retested that trend line. That's another setup I like to play as a day trade, that when the price breaks above the trend line, and then when it retests that trend line, go long there. There's always a good chance that you will see a nice bounce from there, a nice intraday bounce. If you are scalping, right, you can buy 500 shares right there at 167. It gives you a $1 bounce. That's good, decent money, right? Or if you are trading options, buy like 165C there. It moves up $1 or $2 within the same day. I think the delta would be like closer to 30, 40 cents. You can make some decent chunk that day. But again, you have to time your entry at a key level, or there has to be some sort of logic or setup behind it, right? Don't go long between these two levels, because that's where prices fail. That's where the trend is coming. So you want to be long around 166.4, or if it breaks down, and if you really want to go long and play a bounce, wait for the price to get to next key level 163.9, because the chances for it to bounce from that level are higher versus if anywhere in the middle, right? So every trade you have to give yourself a chance of a higher probability if you're day trading, right? If you're swing trading, if you're a short-term swing trader, of course these 15-minute, 5-minute charts don't matter to you. Then you should only be looking at daily view, weekly chart, because if you're swing trading. So if you're swing trading, zoom out, clear all these levels, and then look for these big areas where you can where you can establish a long position, right? Which was this level right here, 134.2. Now, if you have missed that, right, then wait for some other sort of setup to come. What could be the other setup? Other setup could be the low end of this trend bar, right? Because you can see this has been a key level. Why is it a key level? Look at this. The price was a resistance, right? When the price dropped here, it couldn't get above that, right? So that's a resistance. And what is it doing now? That's exactly, it's providing a support level, right? So we know this is a key area. This is a key zone around 158. Now we got a rejection here at downtrend line. If the price drops towards 158, get long there, right? Because you're going long at a support level. That's your thesis. That's your area of playing a bounce, right? And then keep your stop loss maybe one or two levels under that, right? You want to give it a little bit of cushion, right? Because it can go down, give you a false breakdown, and then go back up by the time it closes the day. Or just wait for the price. If you are sort of one of those, cautious traders, you like to see confirmations, then let it break down and see if it closes back up, right? If it closes back up, that means there's a buying pressure and they're not letting the price break down from this point. So go long there and move and keep your stop loss at the low end, at the low of the day, right? Because if the price starts breaking down from that low, it's going weak, right? But your stop loss is tight, right? And you can target the higher values, the higher prices, 179 or even this downtrend line once again, right? So that's how you plan. That's how you that's how you remain in control, right, of your emotions and of your trades, right? Rather than just scrambling to figure out what to do every morning. Focus on few names. Like for example, I only specialize, or you can say focus on around 7 to 8 names every day, every week. I don't care what's happened. I mean, there would be days sometimes I would enter some hot name where it's trading, but for the most part, I'm only focusing on Tesla, Nvidia, AMD, Microsoft, Amazon. I mean, those are like my 8 or 9 names that I know their levels. I know their behavior. I know where the chart structure goes weak, where the chart structure goes strong, because I only focus on those names, and it helps me remain in control. It helps me keep my nerves calm, because I just cannot be scrambling in the morning, figuring out what is happening in the market, who is moving. That just, I mean, or it could be just me that I don't feel very much in control if I don't have a good idea of the price of the chart in terms of higher time frame, things like that nature. So if you focus only on few names, you will feel that you're in control. You will be following the price every day, so it's just better trading practice. Okay. Uh, and so let's look at BA, for example. I just went long BA. Why? Okay, I took a position under 162. Why? Because that was the weekly support level, and that was also where that we the price meets this trend line, right? I don't care what happens if the Boeing is having issues, with their suppliers, or if their planes are breaking down. I'm just playing the chart, right? Because a lot of times, there's a bad news about the stock out there and the stock will keep rallying, right? And there's a good news about the stock and will still keep falling down. So market does not really, I mean, it works in ways, but then in my experience, I just like to only play charts and setups. And what am I looking for? I'm not looking for this price to go all the way up to 250. I'm just looking, 160, 162 was my entry. I'm looking for it to make a move towards, 175, 179. Why? Because that's where it broke down from. Look at this, right? That was the support level previously, right? And we saw the price bounce from there. When it came back there, it bounced from there. It got right, and then it broke down, right? And it met this trend line and the support level. That's where you go along. And now I'm not looking for it to go all the way to 199, 217. I'm only wanting a move back towards the resistance level, which was support level before. So now it will act as a resistance on the way up. So I'm only looking for a bounce, right, towards 179, and that will be my, you can say, a short-term swing trade, right? So I was waiting for this level. I did not buy it here at 175. I did not buy it 170. I only bought it once it broke down this 165, once it around 162. Why? Because that's where I'm okay with the risk that much. My stop loss is 155. That's my risk. I position size accordingly, right? So that I do not lose a certain more than a certain dollar value, but I can sleep fine because I know that's my maximum exposure. It's not like, you know, uh, I do not know what will be my loss if it does not go as I plan that the price will go, right? So that's why you just need to plan it like that. Uh, so now let's take a look at QQQ. What's happening with QQQ, right? Overall index. We know overall index has been in a nice uptrend, but recently we saw a little bit of breakdown, right? Now let's analyze this chart, right? So we had this previous big red week, right? Where did it stop? It stopped right where the previous resistance was. This was previous resistance, and you can see this bar right here broke through that resistance, right? So we stopped right there. We have 2 weeks worth of, you could say, touchdowns right here. So that's our support in the weekly time frame. And look at this. This was support, right? We kept seeing bounces from this zone. And once the price broke down, that's exactly where it ran towards, which is now what? A resistance, right? So what I will do is I will drill down to a daily time frame, and now I would be looking to short this name, short QQQ, or buy put option, or I can go short even a futures contract, because this was support, and now I'm anticipating that this will act as resistance, right? Yes, we can still break above this resistance, but but that's where risk is, right? That's where you take the trade, right? I will take the trade 433.5 all the way till 434. That's the short zone, because that was the support zone previously. So that's what my plan is. Now, when the price trades there, I exactly know what to execute, where to execute, uh, and that's how I will plan my trade, right? So that's when I share charts with you in the group, those are the areas I'm trying to highlight for you guys, right? Where the resistance is, where the support is in different time frames. Yellow, as you know, is my weekly levels. If you see a white, so if you see a white level, that means it's a daily level. If it's a blue line, that means it's an hourly resistance and support, right? So if I drill down to, let's say, 5-minute view, okay? So these are all the key areas in the 5-minute view, right? So if you are an intraday trader, right? If you are a day trader, if you like to do scalps, right? So then time your entry so that you are as close to these levels as much possible to take advantage of seeing a minimal drawdown, right? So what does that mean? What that means is, let's say Monday morning we open right around 432, right? And we see a sell-off. So if you want to do a call option, or if you want to, buy on a weakness, or if, let's say, I'm assuming if you want to do that, then wait for the price to come to 429.4. Why? Because that was the support, intraday support level from Friday, right? This is Friday's low, 426.9, and this is intraday support, right? What do I mean by intraday support? Intraday support means in a lower time frame, right? That's where we saw some resistance or some fight between bulls and bears, right? Because in the overnight session, you can see this was resistance, right? The price was having hard time getting above this zone in overnight session, right? Or even on Friday. Sorry, on Thursday. And on Friday, once we broke above this level, this became support, right? So now if I move this thing forward right here, you can see that's a potential support zone, right? So time your entry here, and you can always keep your stop loss, one key level below that, 426.9. Or if you're a little bit of aggressive trader, you can say, okay, I'm going to take my first entry at 429.4. I'm going to add around 426.9, and my stop loss will be one key level below that. and I would look for the price to bounce back up from that. Or you can say, if it opens strong, you can say, okay, it's rallying. We know this 433 to 434 is a short zone in a higher time frame. I'm going to short around 433.8, and I will add to my short at 435.3, and I will keep 437 as my stop loss, and I will target lower levels, right? So that's how you plan, that's how you look to time your trades rather than trading in the middle of these levels, right? Where the chances of the trade going against you are higher. You are timing your entry at a level which has a higher probability of going in your favor, right? Even if it is going against you, there's a good chance that it will go in your favor at least for a short while, right? So that's what you want as a trader, as a short-term trader, right? So that's what sort of you can say, because if I have to support, if I have to trade full time, right? I cannot be a long-term investor, right? I cannot sit on a trade for 3 months to give me a return and then, go do my grocery. I want to create income every day, every week for myself, for my family, because I'm doing it full time, right? So by that definition, I'm a trader. I'm not an investor, right? So investor has a different mindset, different time frame. Trader has a different mindset and a different time frame, right? So if you are a trader, you have to develop that mindset of being reactionary, not trying to predict the stock price, focusing more on these key levels so that you can time your entry accordingly, right? Identifying few setups that you like to trade, right? For example, I told you I like to trade these, like for example, NVIDIA. I like to trade these, what do you call these, retesting of the trend line, right? It broke above this trend line. It broke above this trend line, and then it retested that trend line. I like to go long there, right? These are high probability setups. I have like 4, 5, 6 of these setups that I like to identify, and I like to take positions, right? Out of the 10 trades I do, yes, 3 would be against me. That will hit my stop loss. That's fine. That's just like, you have to make friends with stop loss. Think of stop loss as cost of doing business, right? When you go open a grocery store, when you do business, there's revenue side of things, and then there's expenses side of things, right? So stop losses are expenses, right? Think of it like that. But your job as a trader is to keep those expenses at minimum, right? So it out of the 10 trades you do, 3 to 4 go against you. Don't lose it. It's okay, right? That does not mean the setups did not work, right? That does not, all that means is it just at that very instant, out of the 100 trades that you will do following those setups, yes, 20 to 30 of them will not work, but the 60 to 70 of them that work, they will give you enough that your net profit will always be there, right? So that's how you have to think. You have to think from that perspective, right? Don't think from one individual trade, right? So that was also one of the reasons I looked into futures. I got into futures because futures allows me to become a little bit more automated, right? I can do automated trading. So this is a ThinkorSwim platform. That's where I do stock trading, right? Which I was just talking to you about based on the levels, based on the setups, things of that nature, right? For futures trading, I have Ninja Trader. I don't know if you guys are familiar with that or not, but I can quickly show you. Uh, what is my password? Okay. So for futures trading, that's basically Nasdaq futures. You can also trade S&P futures as well, right? But this platform is pretty good for trading futures because uh, futures, again, if you don't know about that, again, it's probably beyond the scope of this session to go into the detail. But futures, it's purely price action. You don't have to worry about Tesla, AMD, what is happening in those individual names, if any news is coming out. What futures does is you're purely trading price action, right? And I developed for myself sort of some automated strategies where I just come enable the automated strategy. I have some certain parameters. So for example, let's go into playback mode. Let's go into playback, and maybe last week we can choose one of the days, like let's go to Monday, right? So I'll just quickly show you what I mean by that. So if I go to Monday and let's go all the way to Monday morning market open, right? Around 9:30 it opens, right? So what you're looking at is a chart of NQ futures, right? This is a tick chart. Again, if you don't know about that, it's okay. Don't worry about it, right? Uh, what I do is I open my automated strategy. I apply the parameters that I have that match my risk profile, right? I enable the strategy, click this enable button, and as the market moves, it the strategy, or you can say this automated bot, it looks for the trades on its own. And whenever it hits my profit target or whenever it hits my loss for the day, it stops by itself, right? So I don't have to monitor it. I have done all that stuff, right? I've back tested it, right? All these the past data. I've gone through multiple settings of this strategy to see what suits my style, what suits uh, my style of trading, what suits my trading goals, right? So right now you can see the price action is choppy. It's not going to take any trade, but as soon as it identifies or looks for a trade, it takes a trade. So that was a loss, right? It took a trade and it gave me around $200 of worth of loss, right? And I'll keep going, right? And because I will say, hey, only stop if the profit for the day hits $1,000 or if it hits $1,000 loss, right? Otherwise, it will keep going, right? So you can come up with those kind of strategies as well, if you want to trade. So now it will keep going, it will keep taking trades, and whenever it hits my target, it will stop or it will keep going, and then that's how it trades, right? So I like futures trading. That's what I told you in the beginning. Uh, I don't have to worry about individual names, things of that nature. So if you are a short-term trader, I would say look into futures trading as an additional tool to add to your trading. But if you are just starting up, if you are still a beginner, focus on some learning, right? Focus, because that's what will take you to the next level, right? Because you will not become a good trader if you just follow what I am doing, what Yasser is doing, or what Kumar is doing, or what Ajay is doing. No, you have to do what suits you. So take some time in identifying what sort of trading style matches your personality, because then naturally you will be good at it. Okay. So spend some time there, and then improve your trading further by only taking entries and exits at key levels rather than just chasing some price up or chasing some price down and then wondering what to do next, right? So you should always have a plan in your mind before you enter a trade. You should know where your setup will invalidate, right? Where it will be null and void, right? So that you don't end up sitting in that trade, right? So for example, Home Depot, right? It's one of the trades that I recently did, right? You can see very nice clear channel, right? So as we were talking, what resistance level right here, right? The price kept on hitting this resistance and it fell down. And as it broke that resistance, now if I move this forward, this is support, right? So I took an entry at 329, right? That was my support area, right? So now it's up around whatever, $6, $7, right? But where is my stop loss? My stop loss is one key level down. If it had moved down, I would have stopped out, and that's fine, right? I will take my profits very quickly on this one because the earnings are coming up and I don't want to give it a chance. It can just break down further or go back up nicely. Uh, but my point was to tell you that's how you time your entry. I did not enter a trade here. I did not buy it here. I waited patiently, right, for this trade to come to this level. And then I entered. What was the advantage? The advantage was that I did not see any drawdown, right? And as a trader, that's what I'm trying to do. I don't want to see any drawdown because that's what gives you jitters, right? That's what brings emotions, and that's where you take decisions that are not based on logic and chart, but based on your emotions. So you want to avoid that, and to avoid that, you have to wait for the price to get to the level where you will not have that drawdown, right? Where you will be in control. So I will shut up for a minute and catch my breath. While if you have any question, let me see how to do that. Uh, how do you unmute everybody? 1 second, guys. Stop sharing. Okay. I think you should be able to uh, unmute yourself. If not, let me know. But I mean, I'll stop there for a second and see if you guys have any questions.
Yes, sir. Thank you very much for your contribution.
No, no problem. Sorry, I know I kind of went through it very fast because.
Oh, no. Fantastic. Fantastic. And then I
Okay.
just have one question regarding while you're using this, you never give any importance to the moving averages at all, like
I do
20, 50,
not.
200.
I'm a price action based trader. So what that means is I only focus on support and resistance levels. I find EMAs or these simple moving averages are lagging, and they're good if you are using them for some sort of reference, or like for example, let me share my screen once again. I'll show you. So if, for example, if I go, let's look
To
at this.
HD. You
So
can go
this
to
is
HD.
futures trading. So the
Oh,
bot that I have developed, it does take into account these moving averages, okay? But only for the perspective of telling my strategy. So for example, if the price is below this green moving average, which is this 200 period moving average, I will only be shorting. Okay. I've told my strategy to not look for long trades as long as the price is below 200 moving average. And as soon as the price goes above, which was this right here, it took a long here and it was a loss, right? But as the price moved below 200 moving average, my strategy started looking for shorts, and these were all nice, good trades, and that's why I'm nicely in green. So I only use it for the purpose of telling, some systematic strategy to go long or short over and above these moving averages. But I don't consider them uh, in defining any hard trade criteria. Okay. So because I think I mean, yes, you will see and hear people saying, okay, hey, if in the daily view, here's daily chart, and if I add, let's say, simple moving average. Let's say I add a 200 period moving average, because a lot of people like to consider that, right? 200 moving average, or even other ones, right? 50 moving period moving average, or uh, 13 EMA, stuff like that, right? So yes, I mean, they do have some meaning to it, right? You can see how price paused here around 200 period moving average and gave a little bit of bounce, because there are traders who like to follow moving averages and they will take positions here. But based on my experience, the way I like to trade, I don't find them very useful in my trading. Again, that does not mean that you will not. Yeah, that's what it means. It does not mean that they are not useful. It's all that it means is that I don't find them useful in my trading the way I like to trade. I think they are lagging. By the time you read them, by the time you analyze them, the price has already made its move, right? You can use
great.
them as some sort of entry criteria, but other than that, I don't find them any useful. So, but please
And
feel free to
and
explore
also
them.
when you trade, what kind of volume you enter, you exit, or do you use the options for that? Bigger stocks like
For
the volume.
options, again, for options, I like to buy, like I like to keep an eye. So if you go to this AMD, let's say for example, I like to keep an eye on the implied volatility. I like to buy names or options. If I'm buying, an option, a debit spread, or even a single call option, right? A naked call option. I like to buy when the implied volatility is on the low end, right? Because if options, the way options work, the price of the option is determined through multiple factors, such as underlying stock price, the volatility that is
Yeah.
built into the stock price, right? Time value. So even if you're, for example, even if, why does it happen that, for example, Meta, right? Earnings came out, and before the earnings, right, the implied volatility is through the roof, right? So what that means is even if the stock price moves in your direction after, for example, you had call option, right? And the stock went up, right? But your call value would come down, and you're like, what the hell, why did I lose, right? So you lost because the volatility came out of the stock price. Think of it as a balloon, as an air in the balloon, right? When the air comes out, the balloon kind of, it does not pop, but it just kind of, deflates. So that's exactly what happens to the price of the option. That yes, the underlying price moves in your direction, but but the volatility deflates, and the premium price comes down, and you're like, what the hell? Unless or until, of course, the price moves, 20% or 30%. Yes, then even if the volatility comes down, you still can make a little bit of money because the price moved a lot in your direction, right? So pay attention to implied volatility if you are into options. And then again, if you are, for example, doing option, right? For example, AMD, right? If you want to follow price action, time your call option to buy when the price hits this 145.6 key level, right? And go out 2 or 3 weeks. Because what happens is, if I go into a daily time frame, a lot of times, or I would say majority of the time, price is not going to quickly bounce off of this level. So even if you buy a call option here, let's say you buy 150C right here, you will not see it move up very much, right? Because that's not how options work, because the price has to move up a lot, right? So if you want to take advantage of these levels and trade options, I would say instead of buying an out of the money option, get an in the money option with a higher delta, right? Because then you're almost trading as if it's a stock, right? So for example, if the price touched 145, go buy 140C, right? And go like buy it 1 or 2 months out, so that because the premium will be higher, so you don't want that much risk, so you want to keep the time on your side, right? And then what happens after 3 or 4 days, the price bounces up nicely, and your 140C, which was a higher delta, right? It would move up nicely. And that's where you take profits, right? You played the level with the help of options. But if you are just going to buy an out of the money option, just because it's cheap, it's not going to help you, right? Yes, you will be lucky if you see an immediate bounce the next day, but the chances are you will not. The price will consolidate around this level. There will be some fight between bulls and bears, and then eventually you will see a little bit of move back up towards the next level up, because this is a weekly level. There's a very high chance that the price will bounce from here before it even decides to break down. Yes, it can break down, but the chances of it giving you a decent bounce is a lot higher, because this is a weekly support. So that's how you kind of plan and play the option. So necessarily buying a cheap option is not always the good strategy, if you are playing levels, especially. So go with something in the money, or at least at the money, right? 145C if you don't want to buy 140C because of its higher price, but just a higher delta would work. Any delta more than 40-50 cents option would work better here at a level. Okay.
Thank you. And that's how much volume do you take usually whenever you trade?
Uh, Again, I'm mostly scalping, so I really don't hold or look at the volume that much, to be honest with you. Yes, there are people who like to consider volumes. They want to see more open interest and higher volume to support their narrative, support their trade setups. I personally don't. I just
No, no,
think,
no. I'm talking about when you are trading, like a volume of 10,000 shares, or maybe
oh,
100
okay.
contracts or 10 contracts.
So like I told you, I only trade these big names like AMD, Nvidia, things of that nature. So you will not find me trading, like, for example, PayPal. I mean, it's still a decent volume, but I don't trade PayPal that much because it does not really follow the price levels nicely. I mean, it still a little bit does, but I don't have much experience in this name, so I don't. So I like to play where there's crowd behind it, right? So these names, like these chip names, have crowd behind it. These big mega cap names have crowd behind it. Uh, and when you have crowd behind it, that means I'm not the only one looking at this level, right? But 20,000 other people are also considering this level. So if this levels plays out, that means I will have the crowd behind me, right? So that's why it is important to react at these levels, these major levels, because you will have the crowd behind you, right? Because you and I only, if I buy, you and I buy, it's not going to make any difference. We want the crowd, we want the momentum behind us to give us what we want out of this trade. So
Yeah.
that's
Yeah,
why.
sir, I think the question that he was trying to ask was your position sizing.
Oh, my
Maybe if
position
you can talk
sizing.
about your, percentage
Oh,
of
my
your
position
account that you
sizing. So
put in.
yes, so if I were so the way I like to trade, I would not be buying options here. I don't do options that much. I would only scalp using stock price. So I would actually go buy, let's say, 500 or 700 shares at 145.6. I will give myself a little bit room so that if it gives me a fake breakdown till like 142, so I will go into a lower time frame, so I will have the levels in the lower time frame, like something like this, right? And then I will say, okay, this is where it can bounce all the way from 141 as well, because that's the trend line. So I will give myself room. I will buy my first tranche at 145, 500 shares. If it goes down to 141, 142, I'll add another 500. I will sit on those 1,000 shares, and then look for bounce towards 152, 153, give me a nice decent return. And my stop loss will be one key level below that 140, right? And that's how I like to trade. I like to use shares more than the options. But if you are doing options, then again, depending on your risk, you can buy. Again, it depends on your capital, what sort of account you have, things of that nature. You can buy, maybe a couple of 145C. If it drops down a little bit further, add to 145C or buy 140C, right? Because that's in the money, right? So as soon as the price bounces a little bit, you get rid of that 140C because it has a higher delta, right? And it has a higher premium. So you don't want to take that risk. So what you did essentially is you lowered your risk by entering in 140C, and as it moved up, you made some money. So now you have some cushion for your 145C, right? So that's how you sort of plan and trade strategically, so that you can build some cushion too if you have to end up holding a trade for a little bit longer time.
I have a quick question. Since you said that you always like to prefer buying this actual stock rather than doing options, say for example, in AMD, you said I would take a position at 145, and then later on, maybe if it hits the next resistance, you'll add some more. Why won't you sell a put, like which is almost in the money, like say 140?
Or you can. Sorry, I mean, yes,
Money also on the side, and at the same time,
Mhm.
if it gets assigned, great, I got even at a lower price.
Yes, I totally agree with that. It's a good strategy. Yes, I don't mind being long the stock here. So yes, you can use any. So as long as you are directionally betting that the price will bounce from here, you can use any strategy, any tool. You can sell a put, you can buy a call spread, you can buy a stock, you can, so yeah. So as long as directionally you are betting that the stock will go bounce from here, you can use any instrument to mirror that, to trade that, right? So you can sell option, yes, do that. You can buy a call option if you want to do that, sure, yeah. So as long as you are directionally you want to be, so it doesn't matter what tool you use, put or call or stock, as long as directionally your trade is geared towards a bounce rather than a breakdown here, right? So yeah.
So selling a vertical on AMD, wouldn't that make sense right now at 147 with the buy at, let's say, 140, and make some money at the same time, because it's going to probably, you can make some, like if you simplify
Yes.
contract, you can make
Yes,
some.
you can do that. Definitely you can do that. Yes, that would, because I personally think, like, look at this one right now. So yes, this was a long area, but still the stock can remain under pressure, as long as it's below 165, because that's the one next level up. You can see we have multiple rejections from there, right? So you can definitely make a vertical sort of a play where you can sell something like around 165, 167.5, because that's a resistance level, and you don't want the price going and hitting that level, but you still want, it's okay, it can go towards that level as long as it does not go above that. So yeah, so you can sell that 167.5 or 170, and then on the downside, you can make it 140. And as long as in the next week, 2 weeks, the price remains within this range, you get to keep the premium. So yes, you can make such trades, but as long as you know these levels, right? As long as you can identify these levels where the structure failed, where the price failed, things of that nature, right? Because everybody else also sees that. So you just want to improve the probability in your favor, like that, right? So now we have seen a nice little, tiny rally from the 145 all the way till 158 level, sort of a middle point of this resistance and this support. So it can break out further towards 165, or it can get rejected and go back towards 145, right? But it's a good chance that it remains within this $20 range. But again, with earnings coming up, it can just throw things off. So it's not a good time for that. But if the earnings were not there, yes, that would have been a good thing, right? But with earnings, it's a binary event. It can just break down all the way to 133, or it can go shoot up all the way to 171, 183 if it's a good earnings, or even if it's bad earnings, but the market thinks otherwise, right? So
So,
yeah.
Yasser, quick question. When a stock or an index is sort of trading at all-time highs, how do you find levels above that?
Yes, good question. I don't think, because there's no historical price at those levels, right? So
Right.
you can use Fibonacci extensions for that. You can use just round numbers, because market participants have these affinity for round numbers like 190, 195, 200, 205.
Right.
So you can use them as round numbers, as sort of, targets if there's nothing there. So those numbers provide some sort of resistance or support in those areas. Yes. Okay.
Thank you.
All right. Awesome.
Quick
Awesome.
question. So like when it comes to like when the trades are going against you, like where you are incurring the loss, so that's where like the emotion starts taking like making weird reactions. What has been like some of the good guidelines that has worked for you to kind of like mitigate those losses, even while drawing these supports? Looks like
Sure.
you can draw a lot of lines like based on at various different weekly candles. But how do you control some of those losses better?
So the way it works for me is, for example, right now, if you see, let me take a screenshot of this, and just so that I can explain it a little bit better. So if I take a screenshot of that, so you can see there is this resistance line, right, which is a little bit prominent. And then we have this resistance line, right? And this was support before. This was support before. So now, as a trader, I know two things can happen, right? Let's assume that there were no earnings, right? It can go all the way to the next level, which is this resistance level, which was support before, or it can just fail from here and go back down towards this level, right? So these are the two scenarios that can happen, right? As a trader, right? So how do I plan for that? So I'm not going to anticipate and buy right here, because I'm predicting that the price will break up, or I'm predicting that the price will go down. So based on that, if let's assume that I take a short here, because I'm saying the price will get rejected from here, and it does not get rejected and it starts moving back up. So now, as a trader, it's your job to know where your setup fails, right? And the setup is not going to fail based on your emotions or your dollar value. It's going to fail based on the chart structure. So if it breaks out and you're short, it can still fail all the way from here and go down, right? It can still fail from here as long as it is below this resistance level, because this was the support and now this is a resistance, right? So my stop loss, chart-based stop loss, should be 165, right? So that's and I should target 150 area, because that's the back test of this downtrend line, right? So that's how you control your emotions. Yes. So that means, so now you need to know, hey, if I enter, let's say 500 shares short here at 159, right? And if it goes all the way to 165, that means around $6. So that means my risk is $3,000 here if I get stopped out with the full position of 500 shares. So that's too much. I don't like that risk. I only want to risk $1,000. So then position size accordingly, right? So then maybe only buy 150 shares so that even if the price goes all the way to 166, your dollar-based risk is still $1,000, right? And that's when you will not have emotions because you're like, hey, it's fine. The structure is still intact, right? My trade is still intact and it is still within my risk parameters, right? And then when it starts moving back down, then you can take profits, whatever. But as long as it does not touch 165, your trade is valid. That's how you develop some sort of a logical way of looking into a trade that is not based on your emotions, that is not based on your dollar loss or profit, but purely on the price chart itself, right? Because what can happen is price can price can still move all the way up, right? And gets rejected from this level, intraday level, and it does not go all the way here. Or it can even go all the way here and gets rejected, right? So always keep your stop loss a little bit above this level because what market likes to do is it likes to go trap, the buyers who went long here, right? Thinking that market is going to further break out and it will fail from there, right? So always keep a stop loss a little bit above the key level, or if you are, going long, then keep your stop loss a little bit below the key level, right? Below the structure, so that you're giving it some cushion in case it's a false breakdown or a false breakout, right? Another setup that I will look for now from next week is that if the price goes down, right, and trades around this back test of this level, I will take a long here. It's a good setup. I've traded that setup multiple times. So I would like to get long here. My stop loss could be 150 round number, right? Which is also a sort of a intraday level. And then I would look for a bounce back towards this level, or I will trim, as the price moves towards this level, right? And I can leave some as a runner or not. It again depends on what you want to do. But I know that's so I will wait for the price to come here, right? Or if it breaks out and if I want to go long, I would go long here and I would keep my stop loss a little bit under this support level, right? Because this can act as support now. Once it breaks out, it can act as support and then go back up, right? So that's how you want to trade. Take the trade, right? You don't know what will price do, but you need to have a setup in your mind. You need to have levels in your mind where the chart will fail, your trade will fail, right? Your setup will fail. Take that stop loss. That's it, right? The trade did not work. Move on to the next one. Don't have to get emotional about it. But the only way to not get emotional about it is with the proper position sizing. So you don't buy 10 contracts here because that will be way above your risk profile if the price moves towards 164, right? Because if it starts moving towards 162, you're incurring like 25-30% loss. But from the chart perspective, it can still fail and go all the way down. And you're like, crap, why did I close my trade? Right. So from chart perspective, it can still lose. But you came out because you were having a dollar loss that was more than your comfort level. Right. So that's how you control it.
Can you show us your Amazon chart just like this, just to see?
Amazon chart.
Thank you.
Yes. This is an Amazon chart. Let's see what's happening in the weekly time frame. So yeah, so look at this. This was the support level, right? Almost 2 to 3 weeks of support right here. And that's exactly where it bounced from. And it will not stay there for a long time because you need to have this, you need to have some sort of a conditional order. I play a lot of conditional orders. So what I will do is I will go and make a conditional order and I will say, hey, go buy 166C when the price gets below 167, right? And I will just have that conditional order sitting there. So all you do is, I'm not sure if you guys know about conditional orders, but you can do that. So you can go say, hey, buy 165C, make a condition, right? Go buy 5 contracts at market price because you don't know what the limit price will be at that time, right? So go buy 5 contracts of Amazon 165C. And when the condition is met, what is the condition? When the Amazon mark price is less than 167, oops, 160, okay, I can't write it, 167, and then you submit that order, right? And now whenever the price comes at 167 and below, your 165C will get executed quickly, right? And now exactly go see what happened in the 5-minute chart. If you see, of course, so look at this, price went towards 167 for like 5 minutes, not even 5 minutes. It just made a bottom wick, came back up. Now, as a trader, if you are not ready here, or if you don't have a conditional order sitting here to execute automatically, you're going to miss that level, right? So have these levels in front of you, make some conditional orders, right? And you can trade quickly, right? So that's how you plan. That's how these levels can help you, right? And now exactly look where it bounced from. It bounced, and then where did it stop? It stopped right where the previous support was, right? This was a support right here, which is now acting as what? Resistance, if I move this forward, right? So as trader, you need to learn how to create these levels, right? And you have to create these levels in a very consistent methodology, so that even if I give you a chart 10 years from now, you still come up with the same level, right? The methodology to come up with levels cannot change every day, because then it will just mess up, right? So you have to have a certain methodology, certain way of coming up with these levels, and then adjusting them every day, or every now and then, right? At least after 24 hours you have to adjust them, because price moves, right? And it creates and forms these new levels, right? So I have all these levels, right? And as price moves in this level, I will play these levels. But as the day progresses, as the day closes, I will come back and update these levels a little bit. The ones where the price makes these new support and resistance levels, I will not touch the ones that are far out, because those are historical levels and those are still valid. It's just that as the price moves, it makes these new intraday levels. Okay. So
Yasirji, in this conditional order, would you put a time frame, like a day trade, or
yeah, you can
1
put a day
week, or
trade. You can put for example, yeah, you can put that. I think there's a way to do that. Like you
so you
can
don't go
you can
for
say
like
submit.
unlimited time, right?
Yeah, you can say submit at this time, or you can say submit at when the price of the underlying comes at a certain level or below a certain level. And at the same time, you can say, if none of that gets executed, cancel my order, when this happens. And that's it. And then it will just execute it by itself. And then you can actually even make it a conditional advanced order. What that means is that if my order gets executed, put another order, put an OCO order, which is basically take the profit at this level once the bounce from 161. So execute my long order, call order when the price hits 167, and once executed, get me out when the price comes at 169, or if the price hits 165. So you can do all that in ThinkorSwim, right? So you can make that as a conditional advanced order, like first triggers one OCO, right? So first trigger will be a conditional order, and once the conditional order gets executed, it will submit an OCO order, right? One cancels the other order. So you can make those, and then it will just all make it itself, and then you can save that order, so that you don't have to create that order every day. You just have to come and update the condition if you want every day, but you can save these orders. Okay. And I think I do have a YouTube video where I've shown how to do that. I'll try to find it. Okay.
Yasirji,
Awesome.
I mean, I think we are time constrained today, but when you have time, can you show your criteria on the Ninja Trader for the options trading? I mean, I do some, I've been
Ninja,
doing
I
some
don't
option
do.
trading
I
through
don't.
Apex, but not directly.
Okay. I don't trade options and stocks on Ninja Trader. I only trade futures. So I'm not
For
sure.
futures,
So
sorry.
I have not really explored that much how to trade options on Ninja Trader. I'm sure there is a way.
Sorry, I meant for futures, the
For
criteria that you
futures.
use for
Okay,
the
okay, okay.
stop and
Yes. So this is all automated, right? So if you go to my website, I have some information around. So if you go to the website, go to the trading resources area, you will see I have these two strategies, and if you click on them, it will open up the individual pages for that. And then I have some videos and some other information on what this is, how it all works.
Sorry, you have a website on your own? I
Yes, dear. So I have this Discord based little community. Again, I don't market it that much. I just keep it very, very for lack of better words, very tight or very small, because I'm an active trader myself, and I just don't like a lot of
What was the
noise.
website?
The website is I think you should be able to see it on the screen, iTradePrices.com. And then I also have a YouTube channel under the same name, so you can check it out.
Fantastic.
Okay. And yeah, so again, I provide these key levels every day in the Discord, but then sometimes when I have time, I'll post that in the WhatsApp group as well. And then that's where you guys all ask me the questions and everything. And I thought it would be nice for us to get together for some time, and where I can walk you through some of the logic and understanding behind these levels, so that you can make use of the charts I sometimes post there.
Hey, can I ask a quick request?
Yes, dear.
So I think like at the very starting point as starters, like the thing we need to learn is like about drawing these levels, right? Could you just take like some blank chart without these lines and kind of like try to draw some of those levels?
I just have to I just have to go somewhere
Okay.
right now. But maybe we can do it this in the next weekend. How about that, right?
Yeah.
Or I can give you a link to my video on the YouTube, where I have gone through a little bit in detail about how to come up with these levels, so that you can look into that.
Yeah, that's
is that
great.
okay?
Yeah, that's wonderful.
Okay.
Thank you.
Yeah,
Perfect.
hi, Yasir. This is Shiv Garg. Thanks for taking time and
Hey,
sharing
Shiv, how are
information
you?
and knowledge. Good. How are you?
I'm good,
So
thank you.
I have a small question. So
Yes.
are you using on the futures trading on NinjaTrader, are you using some kind of a crossover on EMA based trading?
So this EMA based trade, so I'm not using a crossover for the purpose of taking an entry. I'm only using crossover to tell my bot that if the 50 is below 200, then you will only look for short setups. And if the
Okay.
50 is above 200, then you will only look for long setups. And then I have a specific price action based criteria for it to short. And so from the perspective of moving averages, it's only filtering the trades. That's it. Nothing else.
And this 20 and 250 EMA, you're looking at a daily chart, am I right?
This is a tick chart right now. I don't know if you're familiar, Shiv, with tick charts. So this
Yes, I am.
this is not a time-based chart. This is a tick chart.
Okay.
This
Got
is
it.
not a time-based chart. It's a tick chart. So if you go in NinjaTrader, and you will be able to see all these different types of charts that you can pull out, like Renko, minute, second, range, Ninja Renko, Heikinashi. So just like that, there's a category called tick chart. So,
Tick chart. Got it.
so people who trade futures a lot actively, intraday scalpers, they use these tick charts. So, and then tick charts, you can have a 150 tick chart, 500, just like in time chart, you can have a 15-minute, 5-minute. Similarly, you can have different values. So the lower in tick value you go, it makes it more granular. It makes it more like that. So that's what it is.
Got it.
Okay.
Thank you.
No worries, sir. Awesome, guys. It was all very nice to touch base with you. I hope I was able to, give you guys some good points to consider in your trading journey. I'm always available
very
if you
much.
have a question or two. I like this. So maybe we'll do it maybe in another couple of weeks. We'll do one more. And in the meanwhile, if you have any question, you can always reach out to me, or you can ask Shiv. He can let me know. You can always, I'm always happy to help in any way I can. Okay. And I will post the link to the recording, once it gets processed, so that people who were not able to join us can see it later. Okay.
Thank you.
Sounds good, guys.
Thank you.
Thank you,
Thank you,
Yasir. Can
everyone.
you also post the link to the website that you mentioned earlier? Thank you.
Okay, dear. Oh, yes. I will do that. Thank you.
Thank you.
Thank you so much, dear. You guys all
Thank you,
have
Yasir. Thank you. Bye.
good party, good desi nights. Okay.
And YouTube, how do we go to YouTube channel?
Look up iTradePrices.
Okay, thank you.
Thank you. Thank you, dear. Talk to you guys. Bye-bye.